Whoops. I should probably close this out. Alrighty. What a couple days, huh? Sorry for missing yesterday. Let's see here. Let me just rifle this out. Here we go. All right. Let's get it going here, huh? Well, fun 2 days. Yesterday's CPI report came out. I need to mute myself here. Okay, now we can go. Now we're good. CPI came out yesterday morning, and like I talked about last week, Monday, I think it was Monday, because today's Wednesday, February 15th, 2023. Can you believe it? For fuck's sake. As I mentioned on Monday for a CPI report, again, like December, everybody was ready for this. Everybody was positioned. Twitter was going nuts on which direction stock market would go. And then it came out, core came in line at 0.4%. Core is the key for the Fed. That's the one they really care about. And when that came in line, we did exactly what we did in December. NASDAQ tanked 120 points and then rallied 120 points and then went back down 120 points and then basically finished relatively flat. You know who wins in that game? Market makers. Anytime you trade in this market, I've said it pretty much every episode, is you got to be quick. If you're trading, unless you're trading like 3 or 4 months out in options, you got to get in and get out right away. There's no in between. When, the NASDAQ or S&P is up and down 2%, both directions in a day, your puts or calls, unless you nail it, are pretty much getting sculled. It's a sicko's game, and we're just trying to play it and make some dough off it. What I've started doing now is trading futures, and wow, what a difference. There's way less tomfoolery. This market loves levels. If you just play off the levels, you are, play small, obviously, but you can scalp this market. It's like a trader's dream, actually. Kind of upset I've been doing this a lot longer. All right, so back to CPI. So it came in flat. And what's interesting, and we talked about this earlier too, was the Fed changed the weighting of everything that's in the CPI. What they did was increase the weight of housing to 43% of the entire number, the entire index. 43% is just housing. With rates, they got 2 more coming. They've already said it. Like they said all in the past year, 5.25 to 5.5. They keep saying it. The market keeps fighting it. Mortgage rates are going back up through 6, probably closer to 7. And that should eventually and finally cool off housing. The only problem with housing, we're stuck behind because of COVID and with all the supply chain restraints and labor shortages, housing starts got dinged hard and slowly coming back, but not fast enough. So inventory is still devastatingly low, and until inventory goes back up, houses or prices can't really come back down. So it's going to take a bit to kind of even that out. But I think what the Fed is doing is front running that a little bit. So increase the weight of housing in the CPI number. And then when it finally starts breaking, CPI number is going to come way down, maybe even negative. And that's all they really care about is that number. They don't really care about the price of anything else. They just care about, looking good. So I think that's what they're doing. Anyways, the market yesterday whipped around. Today, retail numbers came out this morning. They're up 3%. But if you looked a little deeper, it wasn't that products increased in products purchasing. It was increase in product price. So people bought less but paid more. And that was the biggest increase. I think the market understood that initially. But something else was happening today, which is the VIXpiration, they call it. And that's when the VIX puts and calls for the month expire. And when they love to, kind of manipulate the market a little bit so they can get their the best expiration for their calls and puts. Again, it's a market maker's market, and they'll do whatever they can to F everybody up. And that's kind of what they did. And then after expiration, there's also a 20-year bond auction at noon Central. Santelli rated a B, but it was decent. But the 10-year and 20 and everything else continues to rise. And in the market of old, rising rates were negative for equities. Stocks didn't really seem to care. They just slowly ticked up all day and then had a burst at the end of the day. I'm actually stuck in this position. I'm about to get skulled on it. So it was down most of the morning, and then just slowly but surely the Ponzi, that's Apple, how they kind of manipulate the market, slowly just ticked up and up and up. Tesla was up and then kind of took a digger and then came all the way back. Yeah, I gotta get out of this real quick. You might hear a close position. And as rates continue to rise, so did stocks. So the inverse relationship between stocks and yields is dead for now. I don't understand why. We talked about this, I think I mentioned this last week. We did see one day where that relationship broke, and I said that one day doesn't make a trend. But in hindsight, obviously hindsight 2020, I think that was the day the relationship kind of broke, and then no one really noticed, so they kind of paired back up. But ultimately, the past couple trading sessions, that relationship's been pretty much dead. So for now, you can't trade off that relationship anymore. Do I think something will break and something needs to be corrected? Yes. Do I think it's going to be equities? I do, but I've been wrong for, a week now. But we'll see. Just keep an eye on it. I'm not all in on the position, but I do think when we start breaking, we break. And hard and fast. And I know I mentioned this, I think we mentioned this before. Usually the start of breakdowns in equities start with a squeeze. And the names that we're squeezing today, Silvergate, our favorite. Wish was up 22% today. UP Upstart was up 28% today. Remember, Upstart was a $400 stock. It's now $21. That squeezed today. PLTR squeezed today. Although, kudos to them. They actually made a profit. OSTK squeezed today. And there's one other one that... Nonix squeezed today. Lucid Air squeezed today. AI is up again, 10%. I'm not saying it always happens, but normally when you get shit names that squeeze, it's kind of the beginning of the end of the rally. And we've basically rallied all year so far. So let's keep an eye on that. Let's see what tomorrow brings. We also talked about the Microsoft Chat GPT, Google Chat AI relationship. Initially, as expected, Microsoft rallied. I think it rallied about 8%. Google is down about 107. Yeah, probably about 12%. That seems to have kind of changed. You see it as called profit taking on that trade. Short Google, long Microsoft. And now you kind of unwind it. Microsoft weak today. It was kind of weak yesterday too. It's butting up against this 272, 275 breakout point. It did it 4 times and failed. And now it's down a bit. Not down that much. It's 269 and change. But Google, I think, down to 92 or so. Yeah, 92 and change. Now it's back up to about 97 and looking pretty strong. So I'd call it profit taking on that pair trade. Ultimately, Google's going to be fine, but I do think Microsoft still has more upside than Google. Microsoft still hasn't released any numbers on orders for integrating ChatGPT into any systems. I do expect that to happen. The longer it doesn't happen, probably the crappier the numbers are, but given another week or so, they should have something. I don't think Bing is quite out yet. I am on the wait list to check it all out. I think they're still fine-tuning it. You can do some stuff with it, but the full, like Hooli from Silicon Valley, it's going to be like a whole ecosystem now. And it looks kind of neat, but so when that gets released too, then people can really start seeing what this thing can do. I think that's going to be the next catalyst for the upside. I want to talk about the strategic oil reserve. Our fearless leader has announced yesterday, I think, that they're going to release more barrels. I don't think we bought any back yet, which means we're just slowly dwindling that supply. Inflation does pick up and demand. We're coming into summer season where demand picks up. If crude goes back to $90, there's a good chance we dump even more of our reserves. And I don't know if there's any chance we're buying it back any cheaper than $80. But the whole point of that thing was the reserve was in case we went to war and the supply of oil got cut off from us, we would have at least some to refine into gasoline to fuel our planes, our trucks, everything. That was the idea of it. And with global tensions probably at the highest they've been in, I don't know, a couple decades, that's not exactly the most warming feeling, knowing that we're just draining this thing. We got balloons, unknown saucer or unknown objects flying around our airspace. Russia surging again in Ukraine. China wants in on Taiwan. Iran and China are now meeting. Iran and Russia are now meeting. I mean, all three of those guys are in bed together. And we're just, cutting our supply stuff. It's always a real comforting feeling. So let's keep an eye on crude. It's at, it was up at 82, and then Biden announced that, and now it's back down to 78. I mean, the idea is to get it down to like 60, and that's just not happening. So I don't know. That the whole concept of that is silly to me. So just keep a lookout. I'd be long crude, not short crude. I don't have a position though. All right. And then let's talk a little bit about Bitcoin. The old Bitcoin. The old coin that won't die. Why is it up today? No one knows. No one knows, but it took a spike late in the day. It's up at $24,100. It's up almost $2,000 today. Congrats to the longs, I guess. What this correlated with last time was exactly what I talked about earlier with squeezes. When these shitty names squeeze, Bitcoin tends to go with it. The only difference this time is I think Bitcoin... Oh, nope, it stopped right where it squeezed to last time. About 24,280, 24,300. If it breaks through there, it's got room to run, maybe to 2,800, 28,000. But, I'm still not buying it. Another thing that's happening is this almost like a U.S. crackdown on Bitcoin and staking and all these shit coins. I think all that really did was force people to sell, and then Iran, Russia, North Korea, all are just buying it. Let them hold the bag. Let them go all in on it. Because I don't think retail's pushing this up. Retail's pretty wrecked right now. I think this is foreign government purchasing. So yeah, let them buy it all up and then see what happens to it. It's all just going to run up again and then pop. Go back to nothing. So that's my thought on Bitcoin. It's definitely doesn't add up. It's not an inflation hedge. We already know that. It's not really an asset. We already know that. What it is a giant money laundering machine. And who money launders the most? North Korea, Russia, Iran. Because they all sanctioned half to hell by half the world. So that's really the only way they can go around stuff. So the higher it goes, the more you're helping them. Good job. Anywho's, because of Bitcoin, Coinbase is up 17% today. Microsystems, 8%. I'm sure Hood didn't do anything because Hood is the worst company of all time. Nope, up 4.5%. Yeah, Tesla took a run after hours. Classic. All right. So the state of the market moving forward, it's a sicko's world, that's for sure. What is interesting though is we were about to break out last week, and then all the UFO stuff started happening, and then train derailments and all this other stuff. We didn't tank, but it definitely put a short-term top in, and now we're back almost at those breakout levels. If yields come down even a little bit, I think we're in for a big rally. I don't think it's warranted, but everybody wants this thing to go down, and it's just not doing it. So all the people who bought puts need to unwind, need to get rid of those. When they do that, they drive the price of everything up. It is MOPEX week, monthly expiration week this week. So there's going to be a lot of tomfoolery the next couple of days. Probably see some wild swings, gap ups that sell off all day, and vice versa, like today. Start down and just slowly rally up. Just stay nimble. Don't do anything dumb. Don't be a hero. There's always tomorrow unless you blow up today. Twilo. Take two. Missed earnings. But all the new hot trends is buybacks. Announced $1 billion buyback. Stock's up $12. Up $20 or 20% today after hours. All you gotta do, that's like the new flavor of the month. We talked about this. It was initially it was getting included into the S&P, and then it was metaverse, and then it was putting Bitcoin on your balance sheet, and then it was AI, and now we're at buybacks again. But keep an eye out, because Biden wants to ban corporate buybacks. So that might be the reason why all these guys are doing it. Let's get one last pump before we can't do it anymore. And then, kind of see what happens from there. Again, it's a crazy market. There's no real rhyme or reason to it anymore. You just got to play it day by day and take your opportunities where they present themselves, and don't give anything back. It's just the name of the game. All right, I think I've rambled long enough. Let's see. 25 minutes. Yeah, not bad. Might be my longest, but I did miss yesterday. Sorry about that. Happy Valentine's Day. All right, that's going to do it for me. I'll be back tomorrow, same time, same place. Thank you all very much for watching. You can hit me up on Twitter, Krycopter, Krycopter. Hit me up there. Give a little couple comments throughout the day, and then, of course, post these videos there. Hit me up if you have any questions or stock recommendations, or you want to know more about something, or you disagree with something. Hit me up on Twitter, and I'll talk it out here. Anyways, thanks for watching, and we'll see you guys tomorrow. Okay, love you. Bye.